Wednesday, June 5th, market analysis, Stan Ehrlich, and we have a very strong rally in the stock market indexes today, stronger than I was expecting. The highs for the 3 previous days of trading were about at the same level, and I was kind of expecting that to be it, and we were going to head south, which has not happened. But if we find ourselves very close to making new highs for the whole trend, not yet in overbought conditions, and there is a distinct possibility that the market could run into new high ground. Now, this is a resistance area where the market has topped out before, starting back around April 1st. So there's a possibility it could turn down. I just don't see it happening. We're high and last at the moment. I don't jump into a trade just because of an expectation. I need a trigger. There's setups and triggers. We're not set up yet, and therefore I can't get a trigger. And the result is maybe it's going to pop up even stronger, higher, quicker. I'm a little off balance. This is the 1-minute chart. I'm going to chart changed on the June E-mini to say a 15-minute real quick. And as you can see, we're awfully close to these previous highs on May 23rd, but there are some other secondary highs that are right smack dab at where we are now. Well, I need it to drop quite a bit, frankly, maybe even make new lows for the day in order to be a little bit more adamant about the market turning down. I can't say that right now. Let's look at the spider. It's going to be the same story. Previous top is being challenged, not overbought conditions, no gaps to go back down and close per se, although I think there is in the Qs. And I got not good enough reasons to expect it to turn down. Possible double top, a little bit more accurately, small over only the last 2 to 3 weeks. Got to wait. Sorry, S&P 5-minute chart. The spike high didn't, this was a blatantly obvious sell signal on the 23rd last month, which worked out okay. But I just don't have anything right now. Looking at the QQQ daily. Gap to go down and close. Remember, this only trades from 6:30 to 1 o'clock California time, so it can and does gap up and down occasionally, like stocks do quite often. But the futures markets trade a lot longer hours and have less gaps as a result. So I'm looking at, just a moment, a new high for the trend. And let me pull this over. And all along now, recently, the QQQs, well, say the last several weeks, month and a half, something like that, since this low, actually, have been the strongest, the quickest, the fastest, and held on to the rallies the best. And here we are. The Qs are a new high ground by a bit right now. If it doesn't close above 460, then I think we have a minor dip, if not more than that, coming immediately, at least to close the gap. But we don't see that at the moment. We're high and last. The Q 3-minute chart, right up there, very close, a few minutes ago, made the high of the move and new historical highs, I might add. And it ain't happening. There's the gap area in the yellow this morning. We've got the NASDAQ futures contracts, no gap because of the 23-hour a day, right up there against the top, just like the Qs, super close. This would be a good place for a minor double top, but I don't see it yet. We're smack dab high and last. Don't have any major reason to say we're going to go straight down. And the NASDAQ 5-minute chart is just about exactly the same. Of course it is, just the details. Okay, the Russell, totally different animal. It's only topped out in a historical resistance area that we had developed for a very, very, oh, what am I doing? This is the YM. I'm sorry. This is not the same thing I noticed. This is the Dow Jones, which has been the weakest of the indexes that I analyze every day. We got a sell signal on the first high day of April 1st, and it worked great all the way down to an exact buy signal April 19th at the bottom of the move, and it worked great all the way back up to the high to create so far a possible double top. This pattern is still intact. That's all I can say. We need for the DIA to close below the lowest low between the two highs. Then the downside objective will be 34.66.6, 666, the devil's number, 34.666. So that hasn't happened yet. So far, sideways trading range, very possible double top. We'll see what happens. Dow Jones 5-minute. No, this is the hourly. So the hourly chart, we can see that you've actually got a very small double top back here, back around March 26th, a couple days before and after. Then you've got a teeny weeny double top here in the last 3 days. Oh, those days I meant are May 17th, day before, day after. And that worked incredibly well. But the bigger picture is still intact, and that is a broader double top. Well, again, okay, Russell, this is the 5-minute Russell. I should have changed it back. I was looking at something else earlier, to the daily, and spread that out a lot. We can now see that the Russell for years, 2 years, has come into this major historical resistance area. And again, it did it in the middle of last month and topped out, overbought, and turned down. Right now, we've got a little bit of a bullish engulfing developing maybe today, but it's not oversold, so I'm not getting an official buy signal. Next, the Russell daily, come on. And you've just seen this. I'll get a different chart. The possibility of a head and shoulder top exists, but I'm not going to go there right now. I got to see some weakness start to come in. Bonds, new high, didn't expect that. A little off balance here. Resistance tried to stop the rally, not very successfully at all. And we have had 1, 2, 3, 4 days now of significant strength going up to and through the previous rally highs in the last few weeks. So the downward slanting channel seems to have been violated, so much so with new highs that it's probably not active anymore. Maybe if it comes down to 117, 16 and a half or something like that, it will stop at the bottom of the channel, and that could be a couple of weeks from now. 116.03, you know, give or take a little. So I have to start turning bullish on interest rate futures. I was expecting a challenge of previous lows down here and maybe something closer to the bottom of the channel. That looks like it is now not going to happen. So I see the head and shoulder. It's lopsided. That's not the neckline. You know, from that rally high across that one right there, we did break out. I see that. So we'll see. I may draw in that line when it develops. And this is the bonds. The notes have approximately the same formations, and also made minor new highs. So we'll see in the next few days, get back on track again, Stan. So here we go with crude oil. Oversold. Definite likelihood of bouncing. It looks like it's starting today. The bounce should come up to about 76.20, a previous support area that just got smashed 3 days ago. So, and that would be on Monday. That's a minor area of resistance. And after that, I'm still expecting down to 67.30 and into this broad support area. Natural gas bounced off minor support a couple of days ago, rallying a little bit, but I really don't have a lot of conviction as to whether it's going to start screaming higher again. If we do start to take out on a closing basis the highs of the last few days, then I'm going to get more convinced about a move all the way up to 3.5. For the moment, I'm kind of in a little no man's land. It could dribble off again to 2.3. We've got heating oil. It came down Monday and a little bit lower yesterday, and today is going back up a some into a huge, broad support area that has inside it a variety of smaller levels, but the low that we had yesterday doesn't seem to correlate all that well with some great support. It's basically the top of the big support area. Next, gold, silver, platinum, and copper. Rally today around the highs of yesterday and the day before, and a little bit lower than the day before that. So we're not really pushing through resistance. We're kind of at it for the last 2 weeks. What we've got here is a double top formation that, again, like what I've talked about before, has not broken out to the downside on the indexes that have the double top. So we need to see gold start to break down below 2309 on a closing basis before the downside objective kicks in at 2143. Meanwhile, I leave it alone, very neutral RSI, extremely, almost exactly 50 at 50.56. So it could go either way at the moment. I have to wait. Silver, pretty much the same story, but we have made lower lows pretty consistently for the last few days. Not yet oversold. Looks to me like silver could still make lower lows again. It almost did this morning, but we're now at the high, so a little bounce has started. I'm going to pass on silver. Boy, it's too bad. Platinum, new low for the trend. Support held earlier, May 24th, and got broken on Tuesday, yesterday, big time. Today, we're bouncing a little bit, doesn't mean too much. We did not get oversold, although pretty darn close. And otherwise, today's low is not particularly important as far as I can tell. I think we're going to see new lows very soon. Copper, pretty much the same story for copper, although it came down toward one support area that has worked earlier. We're close to oversold. So let's see, we're trying to reverse a little in copper at the moment. So maybe a little rally. Gosh, okay. Soybeans, oil, meal, corn, wheat. Beans are in a support area. They have not quite gotten down to the 1151 downside objective from the small double top formation, which has its first high on May 7th. And then the second one on May 23rd. So I could see somewhat lower, and that's getting very, very close to damaging this longer term bottom, which I think we still have intact. I'm looking for it to turn up at any time. We have been oversold twice now, yesterday and today, in a support area, but it did not yet get to that objective. So a little bit of a tough call, but I think it's going to turn around maybe a little lower real soon. Next, we got soybean oil. Out of the 5 grains, beans, oil, meal, corn, wheat, the only one that I did not get a buy signal at the bottom of the market in is soybean oil. But I've been talking about this for a month or two now. Is this a long-term, major, huge 2-year head and shoulder bottom? I don't like the fact that it's so big, 2 years, and I don't like the fact that it's not at the bottom of a bear market. It's maybe the beginning of a bull market move after a big sideways movement. That is unusual, but I've seen it happen sometimes. So, bullish long term, but it's got to hold. We're coming close to the lows that we made just a little bit ago, May 9th. If it makes lows lower than and closes lower than May 9th, then we probably will drop off significantly more, and the last shoulder is going to be damaged, if not completely blown away, ruined, and I'll stop talking about bullishness longer term and go right back to a low, the move being challenged of 37.38, and maybe this long-term bear market is not stopping and it will persist. Meal got the bottom on February 29th. Small double top. We had a great sell signal on May 28th. Yesterday, we made the lowest low since then. As a matter of fact, we've had a lower close every single day since that sell signal on May 28th. Great. Today, because of getting close to oversold, but not quite, we do see a little bit of a bounce. I'm still looking for the support area 341.80 to be tested and the downside objective to be fulfilled. So we'll see how high this bounce can go. Oh, I'm noticing that today's rally, the tail here, the wick, is right up against the resistance, which is almost exactly what I said yesterday, I think. Nice. Okay. Now I think the market can make new lows very soon. Next, corn. Bought the bottom, buy signal, February 26th. Testing the lows for this move down. There is no real decent double top. It's simply stopped in overbought conditions at a resistance level and is pulled back with the rest of the grains. But it's very close to a significant support level. Watch to see if we can get some turns, because anytime we have a bullish engulfing at this point, I'm going to get bullish immediately. Support oversold for the last 3 days, including today, last 2 previous days, including today. So we're primed, we're set up as there, waiting for a bullish signal. We've got 2 bearish signals in wheat in the last 3 weeks. Now we have new lows in a support area, but no oversold condition, but pretty close. In support and almost oversold tells me probably a little bit lower, but in the support area above 620, if we go there within the next day or two, or closer, 630, 640, then we'll be a little more convincingly oversold, hit actually 25 or under, and be setting ourselves up for a potential trigger and get long if we have a bullish engulfing. Not yet. Slightly still bearish. Cattle. New lows a couple days ago, Monday, bounced a little yesterday, back up to resistance level, and now looks like it's about to make another new low. Next stopping point, and it doesn't look very profound, 174, could come down and test this trend line. So in say a week or something, that would be at 73, 173. And that looks a little more interesting. So I'm calling for low 170s. And that includes 174, this little support level. Hogs did reach its minimum downside objective on its head and shoulder top, which is my favorite pattern. And I did get a bearish engulfing on the high of the head and shoulder top. I can't get much better than that. So the head and shoulders all gone. They are minimum downside objectives, as I keep saying. And we are now touching at today's wick low, the beginning of that support area, which I now think is going to stop the decline. I'm waiting for a buy signal. All the setups are there. Very oversold. Support area. Objectives have been fulfilled. Watch out. Hogs could start to rally very soon. And that's it for today. Thank you very much.